Welcome to SaaS Backwards, a podcast that helps SaaS founders, CEOs, and go-to-market teams to accelerate revenue and increase profitability. Our guest today is Casey Rue, CEO and founder of the Operators Guild, an independent and invitation-only group that's home to the world's top operators in tech. He's also CEO and founder of Fog Ventures, a VC firm that was created to invest and support innovative founders that are helping create the Toolbox 2.0 for the modern day operator. And lastly, he's also in the process of writing a book about a distinct class of executives he's dubbed as scalers. And welcome to the podcast, Casey. How are you?
I'm good. Thanks for having me, Ken.
Excited to dig in. A great conversation. But before we do so, could you please tell our listeners a little bit more about yourself and these two companies?
So I run the Operators Guild, which is now a close to 1,200 person global organization of some of the best tech operators in the world. The easiest way to say it is we don't code or we don't sell. So there are those who build it at a company, product engineering, those who sell, sales and marketing. And in my opinion, there's a third class that used to be considered a back office cost center. They were called accountants and the finance people and the operations people. And now I call them the scaler. So those who build, sell, and scale. We are the scaling organization. A lot of the famous probably names of tech companies you'll know of, we consider our members. You go on the website and you can see more of them. But the titles are CFO, COO, early stage founder, biz ops, chief of staff, general manager, rev ops, and director and above for all those categories. And then we do 150 events a year around the world. More importantly, I think we build incredible friendships. We understand each other and we solve all the scaling problems together through online and offline. And then Fog Ventures stands for Operators Guild. It is the investing arm syndicate of Operators Guild. We have considered some of the best tech deals in the world. If you heard some of the deals, you'll know exactly who they are. We're stage agnostic from pre-seed all the way through pre-IPO. We have a lot of fun investing in deals together as not only the buyers, but builders of a lot of these companies. And so, yeah, that's a little bit of what I do. And then, of course, all this was inspired a book I'm writing. The working title is The Scaler, The Rise of Special Forces in Business, which is essentially startups used to become a hobby in terms of joining one and helping to build. It is now a profession. I've spoken to over 1,200 operators, and it occurred to me, this is now a formal persona and career path to do early stage hypergrowth. And I call it the scaler.
I think that's it's a valuable insight. And the only time I've heard it kind of collected this way, we've talked about the importance of the sales and marketing leaders, the GTM leaders, to collaborate, plan with, and execute alongside like the CFO people. But I think this is the first time on the podcast for sure that we're going to explore this topic. And I think it's really important for founders who may not have all the skills needed to scale up their organization to surround themselves with solid operating talent. So I think this is a great topic for our audience. And why don't we explore this emerging professional category? Now, the idea of a scaler is the emerging idea here. These folks exist in many organizations. Perhaps the CFO comes too early or too late. How do these multidisciplinary professionals differ from more traditional specialists? And why is it crucial to staff this early in the life of a SaaS organization?
I ended up having to decide to write a book on it to answer it thoroughly. So I'll try my best to answer it in, 3 minutes. But basically, to me, everything's on a spectrum. So when you think about stage of company, from one person to Walmart, the later a company in general, the bigger and more corporate a company, the more you specialize. For example, I bet you IBM has 100 people that just do payroll because they're big. Now imagine the extreme. You're 2 people, a dog, and an idea. There is no money yet. There is no specialist yet. What do you mean? You do everything. The dog does everything. That's what it's like. So if you believe that framework, early stage tech, we're talking sub 50 people to start, sub 30, sub 20, sub 10, sub 5. Oh, and also you're against the clock. So the other thing about early stage tech, so specifically I talk about fast moving, more I would call sophisticated type of early stage. So not to pick on a pizza shop or a cupcake shop, but generally speaking, they're not moving really quickly or super complex. So it's fine to have you don't need too many sophisticated generalists, but at early stage tech, you do. In fact, if there's founders listening, which I'm sure they are, most founders that are very good are multidisciplinary. They're trying to arrange an office lease on one side. They got to hire an accountant on the other side. They got to fundraise for the VC. They got to go sell 4 deals. They got to deal with the marketing funnel. They got to hire their CMO. That is as multidisciplinary as it gets. So right there, the value of a multi-generalist, I hope, is obvious. Is at early stage, it is hyper valuable. At later and later stage, it is less valuable. Not to say it's not valuable, but it doesn't apply as much because you're so big. Another reason of the ailment of the big companies, right, is they can't move as fast, right? But they're cash flowing and it's more an optimization game. At later companies, you do have multi-generalists, like for example, Google X or Amazon it's kind of a startup division. Yeah, you need to separate them from the big company and let them be free to try different things and experiment and innovate. And so that's really, really important to have a more of a generalist nature.
I think it would be good to maybe talk about like the third person, right? So you have the 2 co-founders and then
Yeah.
right. So these guys are often splitting
Yep.
2 important domains. They're building
Yep.
and selling.
Yep.
So this next person
Yep.
could
Yep.
be that, that more general multidisciplinary person. And I don't think that founders think that way necessarily. So I think that might be a good place to just begin a little.
Everything evolves, so there's no black and white. But, in the beginning, I'm going to make it up, there's a founder who doesn't want to be in the financial model, but kind of has to do some financial modeling. Okay. And so what happens is they generally hire for things they don't like or they're not good at or they need more of, right? So, if you're more of a visionary founder, you'll hire an operator or finance person to start handling the model and finance, right? And so over time, employees 3 through 50, some will be specialists, like you need a marketing person, right? Or but a lot of them actually need to serve more than one role. So it's very rare that if you get a director of finance or someone that I think is relatively sophisticated in finance, that they only do finance. If you're an early stage head of finance, you're doing HR, you might be playing lawyer for NDAs. You start to do a lot of these things that you don't have the money for, or is not going to justify a general counsel, or you're not going to justify a senior accounting manager. We just kind of do it ourselves, right? Or you outsource it. So the beginnings are very fractionally, and you need a little bit, you don't need a lot, just to move things along. So from employee 3 to 50, you start to have what I would call scalers or generalists. Now, they do have titles. Their titles are generally not generalist. They come in the form of finance and operations. I think if you're starting about sales and marketing, I consider that selling. I don't consider that scaling, even though it's a different type. But basically, the way to think about it is there's vertical and horizontal. A vertical specialist, I think, is like engineering, sales, even legal. The analogy I use, just bear with me, is the military. Army, Navy, Air Force. They're specialists. They're deep specialist function, land, sea, and air, sales, engineering, legal. It makes sense. So it's pretty clear in the Army, you do tanks and infantry. You don't do fly, right? And it's very clear. So there's a lot of clarity and specialty because you have to run all the tanks or you have to fly all this, and they're totally different. Sales and legal, totally different. And then they interact, okay. However, in war, there's big wars where you have the big branches, but all of a sudden, 70 years ago, thereabouts, Special Forces was created. Why? Why do you need Navy SEALs? Why do you need Green Berets? Why do you need Delta Force? What? You have an army, literally. And the reason why, in my opinion, is wars got smaller. So guerrilla warfare. Vietnam War, right? Things where you could not just drive tanks and it's very precision, small, moving, high, fast, but still sophisticated. Special forces people are some of the best of the Army, Navy, Air Force. Okay. So this is not just, but if you actually kind of look at how they're organized, they're horizontal. So a Navy SEAL needs how to swim, run, fight, teach, shoot, save, because there's only 10 of them on a mission. They can't bring the whole entire, doctor force and all. No, they got to someone's got to fly the helicopter and then rappel out of it. And then, so that's the exact analogy. In business, early stage hypergrowth is guerrilla warfare. So the people you need to, air quote, fight the battle or the business, and business is war, it's just not violent, right? It's taking share, right? Resources, running out of it, supplying up. You have competitors, right? You're taking land, which is basically market share. The soldiers you need, the better they are as generalists, probably the better you can succeed to scale quickly and to maneuver until you become a bigger war like Amazon. And then you have big specialist teams. So that's the analogy I use for people that are founders, et cetera, is every business is different. But if you have someone that is more of a special forces personality, which is basically the get it done, they're a little bit deadly at everything, or I call T-shape. So they understand the overall business, but some spike in finance, some spike in systems, some spike in people. You got to mix those together. And the book talks about the different types of scalers. They are who you really need to fight the small war that you start with. But if you bring in specialists, heavy specialists, to a guerrilla warfare, it doesn't really work. So the example would be the big shot at Google who's used to size. Imagine bringing them in to a 10-person company. Of course they're smart. Of course they're good, but it's a different type of fight. So that's what I'm trying to say. And we can get out of analogies and go into more specific, but there's the accountant, so to speak, and then there's the strategic CFO. And that's the difference.
Yeah, it makes a lot of sense. We've seen mismatch, when people hire, like your example, a Google person into a startup. If they didn't come from that startup world, they may not know it. In our business, it's very hard to take a nonprofit marketing person and make them a great agency exec. It's just such a different clock that they operate on.
That's exactly right. There's a speed. There is a comfort with ambiguity. And I can go into that more, but there's a persona. There's an actual persona that lends itself better or worse to early or later stage.
I want to kind of flip this around a little bit and talk about investability of these young companies, right? Because these companies are getting smaller, not larger, right? The AI impact on a lot of these young companies is that they are smaller. So how does this impact their ability to staff and attract investment capital? And also, I didn't put this in the prep for you, but I want to talk a little bit about the bootstrap mindset. I've run into a few of these AI first, AI native application founders, and they're almost spurning investment. And I think it's such a mistake, especially like I met one recently, and he said, well, I'd like to sell between 12 and 18 months. And, he's trying to bootstrap his way to a saleable business. And I feel like maybe some of these founders don't understand the math of growing a business for sale, scaling for sale. And they're like, hey, I'm profitable at 2.5 million in ARR. Why should I take investment money and dilute myself? And it's hard to explain to them that you might get 4 times as much money if you took investment and really scale. So,
I love this topic. It's a very good one. I'll first tackle it in different lenses. I've been at WeWork, which is the ultimate go for it, go crazy. And I run my own, what I would call bootstrapped businesses. So I've kind of done again. I've done 5 or 6 different startups from Series A pre. So what I've learned is one question a founder has to ask themselves is lifestyle. Before you take money, I don't think it's a spectrum on that sense. Once you take money, it's a step function difference. It's not a little bit different. Meaning, and I use extremes again, If you don't take money and you bootstrap it, one of the things that generally happens is you have a lot of control. And let's say you're cash flow positive. There's a lot more patience. There's a lot more answering to no one. And for someone that, I have a friend who likes to spend time with his kids and do what he wants, but he makes far less. That is one reason why I think if your business could get bigger, you don't. If you take money, and I remember this meeting with a young founder, I was a CFO and I was first startup. He goes, "Are you sure you want to take my check?" He's like, "Well, why?" He says, "Yeah, I do. You can take it. And when you take it, the goal is you're gonna be a lot richer and we're gonna be much bigger," which I think this business can. But it's not gonna be this lifestyle business you have right now. You're gonna need a triple sales, right? You're taking the money. So when you take money, there is an obligation to grow because generally, you're raising money at a higher valuation. All the valuation that's higher is baking in some sort of growth assumption, profit assumption, growth assumption. So once you take money, the deal is I will give you more resources, but the war just got bigger. You need to capture more treasure and more land. And so meaning part of it people forget is not just the can I get rich question. Do I want to fight that war? Do I want to wake up every day and fight a bigger war? Some people do, some people don't. Okay, that's the lifestyle. The other side is there are businesses that should take money from a pure just ROI is what I call it. Like this business could be 10 times bigger, and the return on money is well worth, more than 20% a year. Then you do it. Now, this is not an emotional question. This is a business opportunity cost question. And dilution is just one of the formulas in the total thing called shareholder value. I mean, we all know Bezos doesn't own 100% of Amazon. He got diluted a lot. I think he's also one of the richest people in the world. So I don't need to give that explanation to people, but smaller slice, bigger pie. But to me, the real difference is not, okay, do I want a bigger pie or not? It's one, can my business be a bigger pie in terms of the, $1 in, $4 out? Some businesses are $5 in, $2 out. Yeah, that's not going to work. And then the other is it could be a bigger business and good ROI, but I don't want to do it because the other thing people forget about is their time, their life and their time. So they can spend their time hustling more, which is fine, and make more money, which a lot of people chose, or something else. So anyways, those are the factors. You factor that in? Yes, a lot of companies, I think a lot of founders can get a lot bigger. There are some that don't think they can get a lot bigger.
They might limit themselves.
Yeah. So they're happy to go hard and to, scale up. They don't know how to or who, and that's the whole scalar thing. You got a strategic CFO or strategic COO. They can very much paint a picture for you and help you fundraise, but not just fundraise. What are the use of proceeds? To start to model out scenarios. If we got an extra million, what will we do with it? How do we test small and know that this might work before we put the whole million in? So there's quick testing, quick iteration is another way to do it. But yes, in general, things are moving smaller because you can do a lot more with less because the power of technology, AI, etc.
Yeah, I guess I also feel like the missing thing in that conversation was that the moat is so different now, right? So the moat now is execution. The moat isn't you have a great idea or you code well, right? The moat is really, are you going to be better at growing the business than your competitors?
I think if you double click into that, it's more than execution. I think right now it's brand and distribution because what's happening is everyone's got a solution to a problem. There's so many solutions to your problem and they can get created so fast to your point about no moat. The only person that's going to really win in theory is whoever can have a brand or a distribution vehicle, translation, sales, that's going to monetize. That's why there's a whole question of like Granola. I love the product. I don't know if you know it. It's a transcribing device. They had a genius idea to record and transcribe, but never record digitally. It's just written down. And it kind of changed the game a bit on note taking as compared to what Otter's doing, which is it records everything. Well, ChatGPT just did the same thing. No moat. We'll transcribe without recording. I don't know who's the winner. Maybe the person with distribution. ChatGPT has 100 million users. So their distribution power allows them to monetize. So TLDR, who can monetize, not even execute. I can execute on a product. I can build whatever you want. If I'm not getting customers to pull out their credit card, it doesn't matter. The other one is velocity. So distribution and velocity. I think Mark Zuckerberg said it. He goes, look, I don't know if we're going in the right direction, but we're going to win because my team moves faster than any other team. Because there's no moat, right? So, oh, we're wrong. Turn on a dime. Sorry, take your better idea. Let's go, right? So velocity. And everyone's got an idea, to your point. So everyone can build a product. Technology no longer is as much of a differentiator. And then there's brand, right? The Hermes of the world, ChatGPT is a trusted brand, right? You build whatever, Harvey AI for legal. There's other legal things, but for some reason I feel like Harvey's the leader. So yeah, so I agree with you, but I think it's moving toward, and it's moving toward multidiscipline generalists.
I think we should talk about the impact of AI on the staffing, the people doing the work. How is it changing the roles of these leaders, and what should the C-suite be aware of, and how are they going to manage to that?
AI basically, to me, in this current stage, it's doing two things. One is it's substantially impacting things like junior copywriters, potentially bookkeeping, and customer support. Like truly starting to take a big dent out of it. And the org chart of a customer support team will start to look like some senior generalists at the top, and AI agents, right? It's the human plus AI agent combo. And I think that's going to continue to happen across finance, et cetera. It just some functions will take longer to crack, like finance, because it's more complicated, it has money implications. It's not as easy as customer support, FAQs and things like that. Okay. So I think it's an inevitable world of a hybrid org chart of, when I say senior, I mean people that are multidisciplined and agents, because what's going to happen is the need is horizontal. So AI agents are taking care of specialty things, writing emails, whatever the interns, are doing, so to speak. The more specialized, I think, the more programmable it is. Anything horizontal is more complicated. Strategy, more complicated, because it takes in multiple things, including personal relationships. There's a whole bunch of things that are not as structured as writing an article. So that's going to continue to move where, I think one idea is in the R&D department, engineers that have ideas or basically product people are going to be the people left. Because in theory, if you're an engineer that just codes, like purely just codes, right? In theory, you need less of them. But the engineer who has an idea, who has product chops, they can use the AI agent to code, but then adjust the product, right? Because they're more than one. The minute you're more than one something, so finance, same thing. CFOs are going to become more strategic. They're business people who know finance. If you're just purely a finance person trying to model, there's AI that will just model for you. They'll give you scenarios, right? But you need someone who has way more than just finance forecasting abilities.
It's really interesting. I was thinking as you're speaking, that's advice I got in 1978 from my department head in the MIS group at Syracuse. He said, you can't just be a programmer. Go get another degree while you're here. So I ended up with a marketing degree because he said, one day you might be career limited if you're just a programmer. It didn't happen as quick as you might have imagined, but I think it is here today.
That's incredible insight, because I think that was a huge surprise. And I said, when did we ever think an oil painter degree might be worth more than a computer programming degree? Like when did we ever think that was going to happen? And yeah,
those folks are facing a little bit of decline in demand at the moment anyway. But let's move on a little bit. It's sort of a similar kind of topic area. We sort of said, hey, if you're at Google, maybe you're not a great fit for startup, but let's say that's really what you want to do. What can this person that's in a traditional corporate organization, how can they get themselves into the startup environment? Like what skills should they be building or highlighting to get the attention of these very early stage companies?
Well, I think it very much depends on the role. But I do think in general, you need to be able to prove the hustle. I think the stereotype of large corporate is used to a lot of resources, not used to breaking things and moving fast as much. What I would do if I was late stages, I bring all the best practices of a Google, of a, great company, but I'm yearning to get back in there into an early stage where I can move faster, innovate, make bigger impact as one person rather than, 10,000 person, but move us toward best practice, right? So acknowledging that different stages have different best practice. The best practices at Google right now do not work for a Series A company, right? So number one is understanding that, expressing that, but also showing this, I'm going to bring this maturity and best practice future growth, but I want to operate and can operate in a more scrappy, innovative environment. And I'm going to bridge it. I'm going to bring us there. So that's a big one. And the other one is prove to me you understand the dysfunctions and crazy of early stage anything. It's like, oh yeah, I know what it's like to have kids. It's crazy. Do you have kids? No, never had kids. So how do you know? Well, I watched a lot of movies. Well, okay, well, maybe you're gonna be cool and maybe you're gonna freak out and be the last Google guy who was like, screw this, I'm going back to Google, right? So there's definitely just a completely different environment. Goes back to guerrilla warfare versus big war, right? Very, very different environments. So you got to prove to them that you're yearning and can succeed at early, which is basically multidiscipline, right? So don't be the specialist unless that's literally the job you're applying for is, be the best at left eye surgeon. Okay, fine. Then prove to them that. But you need to prove that you are a multi-capable business exec that's going to help the team left and right, not just up and down.
Fair enough.
Last thing, you're not an empire builder. Big one. So when they ask you, how many people do you need? Like, okay, you're the head of a new department. Great. Give me your vision of your next 3 years. That is a test. If you come back with a massive org chart and a whole bunch of resources you need, in general, I think that's a bad sign for an early stage company. They're going to be like, I needed more efficiency and more scrappiness. We can always push the gas easier, but it's really hard to take you back. So I need to see you as a scrappy, highly efficient and smart, taking bets when you need to, not I need to tell you to cut your budget half the time and do less with more.
Fair enough. I want to take some of the remaining time, talk about the Operators Guild. I'd love you to explain that a little more. The purpose of the Operators Guild, who it's for, and then talk to me about how you grew this thing so big. It's a great accomplishment.
It's a really fun story and accident. First 10 years of my life was military and investment banking, Wall Street, so hedge funds. So I did the classic path of, okay, I went to Harvard for economics and to West Point before that. And I said, okay, this whole Wall Street thing looks awesome. And it is. Either that or go to McKinsey, right? Management consulting or Wall Street. Okay, great. So I did the investment banking thing. It was great, learned a lot. Half my groomsmen are from that class. And then I did hedge funds. Also a great profession. But I had a nice, big office overlooking Central Park. I remember my office being bigger than my apartment. I got paid very well. I got to be an investor. I got to invest and talk to the CEO of Abercrombie and Fitch, and it was awesome. And eventually I got bored. Not because the profession's easy, but just something about it was like not fulfilling me. And so I left and I joined a 10-person fintech startup in New York. And I loved it. I loved it so much that I was like, why do I like eating glass? But I had to move to Silicon Valley because at the time, 2010, 11, 12, tech was still Bay Area. And to be taken seriously, it was like, you got to go to the Bay Area. Okay. So I'm no longer investing, which is New York. I'm doing finance stuff at a tech company. A little company I will not name, but is probably one of the most successful fintech companies in the world. Was interviewing. They had 60 people. And now they think they're worth $100 billion, by the way, as a valuation. And they looked at my resume when I was interviewing and they said, do you code or do you sell? And I'm like, I don't know if that's a trick question, but I do finance, ops, and I clean toilets. And I will work for free. And they said, you don't even have a CPA, so how do you qualify for finance here? I'm like, what? There's also, strategic finance. This is like 2013. Long story short, I did not get the job. Probably wouldn't be talking to you right now if I did. But Instead, I got lonely, and I'm a flaming extrovert. Like, I love connecting and being with people. And so I tried to join a CFO group. No offense. It was kind of like Dilbert. I tried to join a founder group. Good looking people, great storytellers. A lot of them were smoozing with VCs a lot because they had to fundraise all the time. So they're kind of away from the action. Okay. I also didn't feel exactly like my people. And then there's 9 people I got invited to a lunch with, ex-McKinsey, ex-Goldman, finance, biz ops. And I was like, you're my people. Hey, do you guys want to start a little group? Like a therapy group, support group. We meet every once a month. There's a few rules. The rules are give more than you get. Leave your ego at the door. No bullshit, no promotion or solicitation. Do not sell your own book. Safe space, what's said here stays here. And the last one is relevance. Active operators only. Not investors, not, we called it Bay Area operators. I'm going to fast forward 10.2 years. We're the only paid professional organization that I'm aware of that has 100x'd organically. We don't have a sales team. We don't have a marketing team. Everything was word of mouth, inbound. So we truly built a community, like how friends are built, right? You get to meet friends through friends. It's no different. But it told me something. Why in the world would an organization, it's paid, by the way, it's free, then you can grow it however much you want, but pay means people have to decide. I realized there was a missing community. There was a missing persona. And part of that was because scaling is a new thing. So before tech put in $1 trillion in the last 30 years into early stage, being an early stage, hyper growth, sophisticated business person did not exist. You know what existed? Computer engineering, product, sales, accountants, HR, legal. But this concept of a scaler or special forces, Navy SEALs, just like in the military, did not exist until there was a fertile ground to support them. And that fertile ground is tech. So OG is not 9 people. We just crossed 1,100, moving to 1,200. We're not one chapter called San Francisco. We are 20 chapters around the world, including Vancouver, London, Mexico City, Austin, Denver, Toronto. You name the tech, the biggest ones are New York, SF, LA. And instead of, my 6th startup, at that point I did 5 more, a CFO, COO, janitor, biz ops, interim CEO, and now founder. It got so big that I never returned back to a operating job. What I operate now is the Operators Guild. We specialize in all the problem solving, whether it's virtual events, online, the most incredible answers you'll see to all the problems because we're so diverse.
Yeah. Do you think that there's going to be a kind of shuffling of the deck of these operational roles and titles? Like in go-to-market, we have the rise of the CRO, a role that didn't exist in reality. 5 years ago, there were very few people carrying that title. Is there some elevation of these operational talents?
I love that. I love that question. I think the answer is yes. It's going to be a little, for example, have you heard of SOFO? That just got created.
No.
COFO. It's a mix between COO and CFO. And I believe Salesforce has it. Salesforce has an officer called COFO. And I smiled because after 10 years, I go, here it is, finally. Because CFO, COO, BizOps, Chief of Staff, it's all a get it done job. Now, obviously, finance has a finance element, but it really is one minus. So other titles, I don't know, Chief Business Intelligence Officer, Chief Intelligence Officer, Chief Data Officer, which it does exist, but I think more so in the engineering world. I think CFOs and COOs are going to become Chief Data Officers. The difference between, I think, a Chief Data Officer in the more technical world versus the non-technical is finance, is all the money that runs through the business. And at the end of the day, what is a business? It makes money, right? Like it's the blood flow of a business. So I think they will move toward the money central figures, CFO, COO, CEO. But yes, I think that there will be some elevation of title. At the same time, look, titles are important, right? Biz ops is going to get more and more formalized. Rev ops, but CRO to me is a nod to finance. Because what is R? It's revenue. Revenue is actual finance figure. Bookings and sales is a sales figure. So the minute you said CRO, it means you care about finance and the business. as compared to I just need to land and book deals. I don't care what the profit is or whatever, like old school, just land in deals, right? And then we'll let finance do the pricing. We'll let them fix it. But I just need all I care about is bookings, so to speak. No, now you care about churn, you care about margin. That's all CFO stuff. So the world is moving to the center, and there will be probably some new title. Oh, the chief AI officer, right? Things like that's going to happen. But yeah, it's a good insight because I think it is going to come.
So I think this is a conversation we could have for the whole afternoon, but we have to land the episode somewhere. So I'm going to land it here. How can people learn more about the Operators Guild and Fog Ventures and get in touch with you? I'd like to learn more.
Yeah, just go to the website, operators-guild.com. Fog is fog.ventures. Oh, Fog, by the way, is an incredible group. If you love to angel invest, we talk about deals together. We see founders, they get to pitch directly. You get to see about the latest products. So yeah, you just go to the websites, apply. Obviously, if you qualify, which is basically badass operators, we'd love to have you. Or if you have any questions, you can hit me up on LinkedIn, etc. My professional mission is to help people who do this profession. I empathize greatly with founders, with scalers, and if I can help you in any way, whether that's jobs. Also we have Guild Talent. So we do the third thing I am a part of is actually Guild Talent, which is basically an executive search agency and talent operation for scalers. So for all the CFO, CEOs, general managers, we are the best at it. So whether it's hiring, jobs, investing, therapy, events, or problem solving, I got you.
That's awesome. Thanks for that. If people want to reach me, I'm on LinkedIn/in/Ken Lempit. My advertising and demand generation agency for SaaS is Austin Lawrence. We're at austinlawrence.com. And if you haven't subscribed to the podcast yet, this is your big opportunity. Go to wherever podcasts are distributed, find SaaS backwards and hit the subscribe button. And please give us ratings if that directory has that opportunity. Casey Wu, thanks so much for being on SaaS backwards.
Thanks for having me, Ken.